uranium miners go boom. Not literally, thankfully. So we don't have another Chernobyl on our hands. So I'm talking about uranium miners' share price. Went ballistic, went boom this December the 7th. Significant increases in their share price. So typically when that happens across the board, some sort of catalyst has happened to drive those share prices forward. So this video, I'll be talking about what happened, what would cause the share prices of all these uranium miners to go through the roof. So let's get into it. Let's look at what happened on the December the 7th. So this is just straight from CompSec. I've got a watch list of uranium miners. I created this watch list about 4 or 5 years ago, so there's quite a few of the uranium miners, but it's not complete. I think there's missing a few of them, but it's got the main ones on here. It doesn't have companies like BHP, which has Olympic Dam on it. So these are simply just the sole uranium players. So it includes Peninsula. You can see the share price of Peninsula went up 35% yesterday. Bannerman went up 26, Paladin 27, Deep Yellow 18, and Boss Energy 12%. You can see on the right hand side there's an announcement and price sensitive announcement lists or columns, and there was no announcements or price sensitive announcement that any of the miners released, which did surprise me, because usually when there's some sort of catalyst to drive the share price forward, there's usually one of the companies usually puts out at least a release to explain why that catalyst is good for the company. And none of the miners did that, which was a bit of a surprise for me. But in the end, it doesn't really matter because the share price moved forward in any case, because the catalyst was good for all uranium miners in Australia. So I'm going to go through 3 of the companies, look at their share price action, just talk about the companies very briefly, and then I'll talk about the catalysts or the reasons why the share prices of all these companies went up substantially on the 7th of December. So first company I want to look at is Peninsula. So this is a company that I do own. So I did have a small stake in this. Well, maybe it's not small anymore, but I bought a few months ago. And one of the reasons why I bought into Peninsula was they had a highly dilutive and a heavily discounted capital raising about 7 months ago. I think the share price was something like 11 or 12 cents. And the capital raising was maybe at 6 or 7 cents. So they're heavily discounted. That created some disillusioned shareholders, brought a bit of negative sentiment into the share price. And we saw the share price go all the way down to less than 6 cents. So that was good buying at those prices. But what I saw between September and November was very interesting and actually fairly bullish. We saw the volume traded each day just decrease slowly during that 3-month period. And that's actually quite bullish. And that suggested to me that those disillusioned shareholders that held for the heavily discounted capital raising were selling out or were almost completely sold out. And in the middle of November, the market decided to test out my theory that those disillusioned shareholders had sold out, had completely sold out. Had completely sold out. And I've got that marked as the first sign of breakout. So the market actually did test my theory, and it tested to the positive. It was a successful test. So what happens with the test is the market, I don't know who does it, we'll just call it the market, drives up the share price. And what happens with when it drives up the share price? It's a test to see if there's any shareholders, any disillusioned shareholders, any sellers who want to sell in that increasing in share price. And if there are sellers, if it sort of brings out those sellers, the share price will react to the downside because of all the selling. But there was no selling on this day. In fact, the share price ended up at the high of the day, which is very bullish. So the market said the sellers have gone and the share price can go forward from here. And that's a positive test to see if there's any more sellers in the market. There wasn't, there weren't, and the share price just kept going up from then on. So this does happen from time to time, where the market does test to see if there's any sellers or buyers left in the market. And this is a significant case for that. So that was the first sign of a breakout, and we've just seen the share price go up and up from then. It went from 7 cents to 9 cents, and then on the 7th of December, it went from 9 cents all the way up to 11.5 cents, which was a 35% increase on really high volume too. I actually expected a bit of selling on this day, on the 7th of December, just because I think there would have been some shareholders going back a year or so who bought in, say, 12 cents, who have suddenly seen the share price get up to their buying price and thought, now's the time to exit. I can get out break even. And you see that sort of thinking be quite prevalent in the market, but we didn't see much selling. So a lot of buying, and that's what drove the share price forward. What I'd like to see in the next next month at least, is to see the share price go sideways, consolidate at these levels, and not go back significantly to 9 cents, because if it sort of stays above 10 cents, that will be very bullish in my eyes, and that would be a good sign that the share price can go forward from here on in. And I'm fairly bullish about Peninsula all up, just because they do have a project in Wyoming that can be go into operations fairly quickly, and they've set it up so it's a low-cost solution to uranium. And the fact that they've got a project in Wyoming in America is good, especially because of the catalyst, which I'll get to soon. The next company I'm going to look at is Paladin. So this is another fairly bullish looking chart. We're at year time highs. Share price is at 21 cents. If you go back a year, the share price was about 8.5 cents or so, so significantly higher than a year ago, and a really good uptrend developing, almost cup and handle developing, but the last trading day sort of blew that technical signal out the door. 18 cents was a resistance level, just because the previous high was at 18 cents in August, and it's just blown through that. That's very bullish when you see the share price just blow through a resistance price. So very bullish with Paladin looking forward. So this is another company you could buy in, and this is probably one of the most well-known uranium sol players on the ASX. So most people do know about Paladin who want to play in the uranium field. Not literally play in the uranium field, that might not be a good idea. Next company is another company I'm really high on, and this is one of my favorite charts for uranium player. This deep yellow chart is a beautiful chart. I do call some charts beautiful, and this is a definition of a beautiful chart. So between about April and midway through September, we had the share price just going sideways. There was some sort of catalyst in the middle of September which saw the share price go from 25 cents to 35 cents on really high volumes. So something happened that day, and the really good result of that was what happened in subsequent days and months was the share price went sideways. It didn't go back down, so there was not a lot of selling into that share price increase, which was a good sign. So not a lot of selling means that the share price doesn't go backwards towards that 25 cents level. And once all those profit takers were eliminated from the market, that could lead to the share price going up. And we saw that in November. The sellers had been weaned from the market, and the share price went from, say, 32 cents all the way up to 44 cents. And then we saw that increase in share price on the 7th of December. And we're at, we're at year time highs with deep yellow share price. So very good looking chart, this one. So what were the catalysts behind the increase in share prices for all these uranium companies? So the first thing you really should look at is the uranium prices, because just like all miners, uranium miner is a price taker, and they're heavily reliant on uranium prices. So how they perform is highly correlated to uranium prices. Just like all miners, it's also like some farmers. They're highly reliant on the price of the underlying commodity they're selling. So because they're price takers, I always look at the price of, or the chart of the underlying commodity, in this case uranium price chart. And you can see a massive decrease in uranium price from at the beginning of this chart all the way down to that low of about 18 US dollars per pound, which was the low. Hopefully that's the low, all-time low, maybe not the all-time low, but the medium-term low. But ever since then, we've seen an uptrend develop, and I've just drawn in that upward sloping red line, which is the uptrend. And the easiest way to draw an uptrend is you find all the lows on the chart and see if you can connect a straight line that connects those lows together. And you can definitely do that with uranium prices. So there's an uptrend there. So going forward, if the uranium price goes below the uptrend line, that would be very bearish. But at the moment, it's staying above that line, which is quite bullish. Now, we did see the price of uranium get towards $30 in 2018, and then slip backwards and test out the uptrend in late 2019. But we saw, I think it was in May 2020, we saw the uranium prices go through the roof. So it went from about $24 a pound to about $34 a pound. And there was a really good catalyst behind that. It was COVID-19, and a couple of uranium mines, some of the biggest uranium mines in the world, had to shut down because of the COVID-19. And those mines were in Kazakhstan and Kamenko in Canada. And because they shut down, that put a bit of a jolt to the supply of uranium throughout the world. And we just saw the uranium prices take off. Because, of course, uranium prices are dictated by supply and demand, just like all commodities. And if there's a bit of a jolt to either one, you can see that uranium prices react to that jolt. Now, those two mines have come back into production, and that's why we've seen the uranium prices slip backwards over the past few months. Now, right now, the uranium prices are testing the old high in 2018 of around just under $30 a pound. And I think there is a chance it might slip down below that support line, that old high. And if it does slip below that, I think it's going to potentially test the uptrend, which would be something around $26 or so in the next few months. If it does test that and is successful and starts going back up, that would be a good place to buy some uranium miners. But the main story out of this is uranium prices were not the catalyst behind the increase in share price for all the uranium miners. There was something else. And that something else was easily found if you just Googled it. So the catalyst was this US Senate committee had approved uranium reserve bill. So what this bill was, a bipartisan bill, which is quite important, was they want to create this strategic uranium reserve or stockpile moving forward to become less reliant on international countries or companies for their reserve. So this is really good news for Australian uranium miners because this excludes any Chinese or Russian company involvement, and it's good news for Australia. So this stockpile is going to increase over time. Donald Trump wanted to spend $1.5 billion a year increasing that stockpile reserve, but they've only put the sum at $150 million. But anyway, what it means is the demand for uranium will go up naturally because they have to increase the stockpile. So if you increase the demand and supply is not increasing, that's going to put upward pressure on uranium prices moving forward. And we already know there's going to be upward pressure on uranium prices moving forward because there's going to be a disconnect between demand and supply over the next few years because the demand for uranium is going to go up, but the supply won't go up. We don't have a lot of uranium explorers out there, and even the uranium miners won't be able to handle the amount of demand for uranium moving forward, which means uranium prices will have to go up eventually, and that's why I'm bullish on uranium. Very simple explanation. So thanks to Small Caps, who did a very small article on this news. So have a look at that link I've got there if you want to have a look at that article. So anyway, that's all I've got on this video of why the uranium miners' stock price went through the roof on 7th of December. If you have any comments about this video, about uranium, why I'm bullish, if you have any dissenting ideas about uranium, why I'm a joke because I like uranium, leave a comment. I like dissenting, contrarian views to my own. That's how I learn. So I happily will reply to you and have a discussion about uranium. If you're a greenie and think uranium is the evil and it's an evil commodity, I like to have a discussion about that too. I think it's something which Australia should be looking at. We should be looking at to developing nuclear reactors. I think it's a very green energy source, and I think us discounting using uranium and nuclear reactors is a negative for this country. Anyway, that's all for this video. I'm not a financial advisor, so if you do need some financial advice, make sure you seek out someone with credentials and someone who is an expert because they can look after your own financial needs. And any advice you think I've been giving in this video, it's not advice, it's just here for educational, entertainment, and research purposes. That's all for today. Have a good day. Bye.